let's get some perspective going with Saurabh Srivastava, co-founder and former chairman at NASSCOM. Mr. Srivastava, thank you for joining in. Now, much against the industry's wish, the government hasn't relented, and now this angel tax, which basically, for our viewers, just to explain, basically the differential between the fair market value of shares of an unlisted entity versus the value at which the investment is made, that differential is going to be taxed as income. It's income from other sources, and it gets taxed as regular income. And the tax has to be paid by the Indian unlisted company or startup. So, Mr. Srivastava, given that now foreign investors have been covered, this basically means that any investment that's coming in from foreign private equity, big foreign investors, that also gets taxed?
Yes. I mean, unless there are changes made, and I suspect some changes would happen. At least I hope that would be the case. They'll all get taxed.
Is there a workaround, so to speak? Because, even earlier, the angel tax rules aren't new. They have been in existence since 2012. Of course, the remit was only domestic investors. But even then, I think, if you are a category 1 or 2 AIF registered with SEBI, and these category of funds were exempt. So I don't know. I mean, can there be some sort of restructuring or smart structuring of these foreign flows in a way that it's more tax efficient? Do you see that happening at all?
No. See, foreign investors, VC funds, they don't end up creating entities in every country in which they invest. So if we don't tweak our rules to be investor friendly, what will happen is all of our startups, all of our companies will flip overseas because that's where the fund will create investments. So in some ways, this rule has the reverse effect of what we really want. We don't want our companies to flip overseas. If we put these rules that make it difficult for foreign investors to invest in India, then our companies will have to flip overseas to get that money. Because I should share with you that 85% of the risk capital, venture capital, private equity, angel investments, 85% of that capital that goes into the Indian startup ecosystem actually is foreign capital. I mean, if it wasn't for foreign capital, we wouldn't have had a single one out of the 100 plus unicorns that we have. So we are very dependent on foreign capital. So I think it's in our interest to make sure that they find it friendly to invest here. And really, actually, at the very least, we allow, for example, Indian VC funds, etc., that are registered with SEBI to invest. And so in some ways, I think if we look at that list, we should say, look, if VC funds or private equity funds are registered or regulated in markets, or countries that are compliant with the Financial Action Task Force or compliant with the International Organization of Securities Commissions, then they should be treated the same as VCPE funds registered on SEBI. And we should also extend that to say companies that are listed on stock exchanges abroad, again, where the FATF and IOSCO compliance exists. FPIs should be allowed to invest. Banks
Mr. Srivastava, just to understand, because you gave a very important number there, you told us that 85% of all investment coming into startups is actually foreign investment. So this could have very far-reaching consequences, obviously. At present, in terms of domestic investors, I think venture cap funds are exempt, right? We're also awaiting, I think, draft rules to come out, which will have more details on how this is to be operationalized. What clarity would you want to seek from the finance ministry? And as of now, till there's a rollback or a rethink, if at all there is one, how do you think the computation will work in terms of what is fair market value? I believe it was on discounted cash flow method up until now. Correct me if I'm wrong.
See, the problem is, yes, it's on discounted cash flow method, but the problem is that the tax authorities frequently look at what you've projected based on cash flows that you expected. And if you haven't achieved them, then they will relook at that valuation, which is completely wrong, because you have to go back and understand when the valuation was made, what were the circumstances. And it's a very, very inefficient way of doing it. For example, companies in the biotech area, people who are doing drug discovery, they won't have cash flows at all, maybe for a decade. How do you value them? Today, if a startup goes to 3 of the world's best VC funds, the chances are each one of them will value that startup differently. So it's a very inefficient way of doing it, which is why no country in the world has got into government trying to value startups in terms of imposing angel tax. All countries have the same concerns about money laundering, all of this, but none of them have actually imposed angel tax. And quite honestly, if you look at it, we have enough rules and regulations that would take care of this.
Mr. Srivastava, I take your point. I think that was the original idea of introducing this tax way back in 2012 as an anti-money laundering sort of a measure to establish a tax trail. But very quickly, just a couple of seconds left on the chat now. Do you think NASSCOM would make a wider representation? Because now the bill has been passed. I mean, it is the new law from FY24 onwards. Are you really hoping for any kind of change?
No, NASSCOM has made a representation. And many of the things I'm telling you are in that recommendation, because essentially our bureaucrats are amongst the smartest in the world. I think the only thing they need to do is this money laundering issue. Every country has it, but there's a reason why no country in the world has imposed an angel tax. So we have just taken a blunt instrument. It's like having a fly on a glass table and you swat it with a sledgehammer.
Mr. Srivastava, just a large quick point. Angel tax, funding winter, SVB in the US, it's been tough going. If you could just sum up everything in the last 30 seconds, is the environment looking very challenging in the new financial year for startups in India?
Well, the environment is certainly challenging because of developments overseas on which we have no control. And we do depend on 85% of our money from overseas. So if we make the environment more difficult here, then it's going to be very difficult for our startup revolution, which has just gotten started. So I would hope that we would look to replicate a Silicon Valley bank tag instrument within India and really learn to take not a sledgehammer to solve these issues, but take a scalpel and solve a specific issue. Because I would just take 1 second to share with you that we have like more than half a dozen regulations already that deal with it. We have GAR, we have income tax. If, source of funding can't be explained, you have to disclose PAN, KYC.
Yes, absolutely. I think that's a point well taken. I think it's been made repeatedly by the industry that there are lots of anti-abuse, anti-avoidance measures. So why look at, literally increasing the tax remit? All right, Mr. Srivastava, we're out of time on the chat. Thank you very much for joining in with that perspective. We'll take a break on that note. On the other side, back with Mitesh, get some technicals going on the market.